the presentation. If you have a question during the presentation, on your screen on the right side, there's a place to type in a question that will pop up on our screen, and we'll try to answer those questions. And you can ask those during the presentation as well. So we'll get started with the presentation. I'm going to turn it over to Ashok. And it's scheduled to take about 20 minutes, but if there's questions at the end, we can, of course, entertain those as long as we need to. So Ashok, why don't you take it away?
Thank you, Steve. Good morning. Again, we appreciate you taking the time from your busy schedule to listen to this webinar. And we're actually very excited about talking about the VA mortgage program, largely because it is really underutilized. And just to go over some of the numbers, there are about 999, or let's say 1 million veterans in Ohio. And so it translates to about, doing some fuzzy math here, Steve, it translates to about 1 out of every 8 adults is a veteran. And if you were to just think about it for a second, that is a huge, huge part of the population that is around you. And so, keeping that in mind, I think there is a big, big opportunity here that is not being utilized for all kinds of different reasons. In 2011, there were a total of 8,106 VA loans done, or 0.85% of the veterans used the VA mortgage. That means, if you really think about it, 99% of the veterans do not use the VA mortgage. And a big part of the reason for it, and I think at this presentation we will not be able to go over the actual reasons as to why this is happening, but it does give you a little bit of a pause here to think about why it is that 99% of them do not use it. And a lot of the blame, or the reason why that happens, is the lending community and, of course, the realtors. They guide veterans away from it. So going on, the VA program, the VA loan program, is a benefit that is offered to eligible veterans. And the most important, or the most basic requirement, is that when you are dealing with a veteran or active duty, you need to make sure that they have the eligibility. Getting the eligibility, or the COE, or Certificate of Eligibility as it is called, is not as difficult as people think it is. So the basic requirements is that a veteran has served at least 181 days during peacetime. So that's 6 months and 1 day. During war, which is the time that we are in right now, if they are called to active duty, then they need to have served 90 days to qualify. If you are in the veterans, if you are a veteran that served in the reserve or the guard, then you have to have 6 years of membership in the guard. And the important thing there is that they need to have at least 1 point per year to qualify. That's actually a pretty important thing. Spouses of veterans also can qualify, but the basic qualification there is that the veteran should have either died in active duty, or from something that was caused, like a disability that was caused during their active service. So if it is a service-connected disability that resulted in their death, then the spouse can qualify. Steve, Dan, do you have anything to say at this point right now?
Nope, it's pretty straightforward. There are some, if you look at the manual, there are some other specific guidelines for older veterans, but ultimately, if the veteran received a certificate of eligibility they used to years ago, they'll know they've been qualified and eligible for the VA financing. But if there's any doubt, they can always call a local lender.
Another thing about the eligibility is that the veteran has to have had an honorable discharge. They cannot qualify if they did not get an honorable discharge. So the eligibility is confirmed by the VA. The Veterans Administration has actually done a whole lot to make this process a lot easier. And I'm not exactly sure of the date, Steve, but I think most of the veterans after the year, the late 90s, so let's say 2000, that were discharged after the year 2000, most of their records are online. The area where it's a little bit tricky getting the certificate of eligibility right now and can take some time is members of the National Guard and the reserves. Also, if a guardsman or reservist has been called to active duty recently, so they went to Afghanistan or Iraq, then the 90-day rule would apply to them. And typically, it's the veteran can go online to get their certificate of eligibility, but I think it is largely the responsibility of the loan officer to facilitate that. The benefits of the VA loan program. They may purchase a home with no money down. Sellers may pay closing costs and prepaids, and we understand that the limit is 4%, but right now there is a question that we were discussing earlier that it may be possible actually to increase the seller's discount, and we will get verification on that later. There is no mortgage insurance, but there is a funding fee that the VA charges for this no down payment loan. However, if a veteran has a 10% or higher disability rating, then the funding fee is waived. From all the statistics that I have seen, Stephen, again, it's about between 25 and 30% of veterans actually receive the disability. So again, when you talk about all those veterans that can qualify, 25 to 30% of them would not have to pay the funding fee. This is an amazing program. As a matter of fact, and we can talk a little bit more depending on how much time we have left. Okay. Benefits assistance, apart from the VA program itself, the veteran buyers may use the OFA program, and OFA DAP may be used for closing costs. And Dan, this is kind of a little bit out of my normal business that I've done on the VA loan, so I'm not sure how that applies. Maybe you can talk a little bit about that.
Well, the OFA program, they provide down payment assistance, and of course, since a veteran doesn't need down payment, they can use the OFA funds for closing costs or prepaids. And the veteran gets an attractive rate through OFA, and they can get more information directly from the Ohio Housing Finance Agency, or probably better yet, through their local lender referred by their agent.
Yep, that was Dan Hickman. He's on the team also with us. He's our technician. So that was Dan Hickman. Go ahead, Ashok.
Yeah, and so continuing on, thanks Dan. By the way, Dan is like a walking encyclopedia on these things. And so now, going further, we are, the sellers may pay off veteran debt at closing, and I am thinking that this applies that if veteran had a previous mortgage and has some debt owed to the VA, that is what that's talking about, Dan, or is that?
It's more typically used, and it's not all that well known, I presume, but the VA program does allow the seller, as a part of seller concessions, if funds remain, to pay off veteran debt. So if the veteran has a little bit of a debt ratio issue, but has maybe just a couple of $1,000s or so left on a car loan, the seller can actually pay that car loan off at the time of closing, and that may make the difference in the veteran qualifying or not.
Oh, great.
Or if there's money left over, and we're aware of that prior to closing, we could use remaining seller concession dollars instead of leaving them on the table to pay off some veteran debt. So it's another great benefit to the veteran using this program.
And I did not know that. Thanks, Dan. So again, the seller concession and the benefit that the veteran has and the flexibility they have on getting this transaction done really presents a fantastic opportunity for the realtor when they recognize that someone is a veteran and are able to help them. Some of the program requirements. Now, termite inspection report is required on every VA mortgage. So it's not a big deal, particularly in Ohio. There's rarely an issue with the termites. So it's a normal part of your inspection, and it's just a report that you have to have at the closing. From the perspective of the VA, the appraisers make sure that the property is safe and sound and secure, and they don't act. This is a normal concern I have heard from realtors about how they think that the appraisers act like inspectors, and they really don't. What happens is that if they see something obvious that is either a safety issue or could affect the marketability of the property, then they bring it to our attention and it must be cured. The types of loans, the standard loan limit in Ohio is $417,000. There are different aspects of eligibility and how you figure this out, which again is not something we can go over on this webinar. This is meant to be a short presentation, but a misunderstood part of the market is the jumbo loan. So in Ohio, it is possible for a veteran to get a VA jumbo loan for a purchase up to $1 million. And it is an amazing product, particularly when you think about it, that even some of the wealthiest sometimes don't have the best credit because things have happened to them in the last few years. The FICO score can be 640 and the interest rate can be in the low 4%. The down payment is much less than the conventional mortgage, and it can be a tremendous product. One final thing, the Lender Realtor Committee and the Board of Realtors has really made a commitment to try and promote the VA mortgage, and to that end, on October 18th, there is a 3-hour CE course at the Board of Realtors from 9 a.m. to 12:10, and lunch is being offered there. At this point, Steve, do you think we should just open it for any questions, or do you and Dan have any comments?
One comment with regards to the property types. They allow financing of 1 to 4 unit properties, but what's somewhat unique about VA is that sometimes they will do a little bit different and unique properties that are not financeable, say, through FHA. VA has taken an approach that if it makes sense and if we can get a good appraisal from the VA appraisal department, a signed appraisal, then in many cases they'll take something a little bit unique. I have financed a bed and breakfast with VA just this past year, and VA was okay with it. It was all about the comparable sales. So they do allow some unique product situations. I would advise talk with your lender before you enter into a contract to make sure you're safe there. But the whole program is very good to the veteran. As we said, no down payment, closing costs paid by the seller, and the biggest item that I see is that frequently it's not really brought up in the conversation when you're working with the buyer. So my recommendation would be to always, any buyer that you're working with, just ask them, are you a veteran? It's a program that should be in the conversation as far as an option with regards to no down payment and potentially the funding fee being less or even waived if they're a disabled vet. So definitely make it part of the conversation when you're talking to a buyer you're working with.
Dan, do you have anything to say?
One last thing I would add is to Steve's point, an excellent point. A lot of times it just doesn't come up in conversation. So to be asking every buyer, and also veterans, I believe, think that they can only use this benefit one time,
right?
And it can be used over and over. It's a terrific program, underutilized, as Ashok said earlier. And we appreciate your participation today, everyone. And if you have any questions at all, please feel free to contact Annette or any member of the committee or your lender.
And at this point, if you have any direct questions, you can type the question on the screen, as Dan had said. And we're
done.
We're done.
Thank you.
Thanks again.